It's Monday, October 24th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. I'm going to recap today's markets and continue on with the ongoing views on what I believe is coming in the near future. Starting off with the crude oil. You know, we had an interesting session here with a breach of $50 and the immediate rebound. This honestly doesn't surprise me. I talked about that there's support in this area below $50. I think it's probably a classic new wave bear trap, and I'm standing by my wave count, and I think we're still probably going to see a rally back towards 51.50, maybe even better. So I think we have a high-risk courtesy dip situation in effect, and I would view any moves in the December contract currently trading at 50.47. Any move down towards $50 I think I would view as an opportunity for ongoing upside correction towards 51.50 prior to the move to $49, which now seems much more realistic given that we went almost to $49.50 on the weakness today. Okay, turning our attention to nat gas. We are very close to the bottom of this channel, and we're starting to see some momentum divergence with the relative strength index. It's only Tuesday tomorrow. Have to figure out that the report is going to somehow be involved in this bottom if it's going to set up in along the lines of the ways that I'm thinking here, which will be a massive opportunity here. So I don't think we're going to break 325 in the December nat gas, but it could get close. So again, this should be quite a courtesy dip set up here in the next couple days as we go into the report. We should hopefully have a little better handle on how it might play out. And it could be that we could have a big bounce prior to the break, but it doesn't look like we're going to get much above 340 here between now and Thursday's report. Well, continuing to campaign on the bear side of the gold perspective, you know, we stopped right at the 62% retracement and came slamming down this morning. The only thing that was not so bearish about it was the fact that we took out the previous low and did not collapse. So this is consistent with the idea that this is probably going nowhere in a hurry, that this is just what it looks like, a mess. Maybe this is going to continue on through the election. Who's to say? Certainly not me. But I think the best and most likely scenario here over the near term is to anticipate continued weakness with a belief that we're headed towards 1250, more likely than above 1277. And we are currently trading at 1264.70 in the December gold. Okay, when it comes to the euro currency, unfortunately, again, nothing new to say. I still believe this should be a terminal wave. How much further? I don't know. 108.50 doesn't seem unreasonable. But again, if this scenario is correct, the next move of significance ought to be back up because we really should head back above 110 in the very near future. If the market does not start to recover in the next day or so, we might have to consider something a little more bearish, like an ongoing third wave. But no reason for me to go with that scenario as of right now. All right, I don't know what to say about the notes. Not a very impressive way the market has come off. However, I have to think that the trend is still by and large sloppy up. And I'm sticking with the idea that prices are headed higher, although I, at this point, have to back off the target of 130.30, which now seems like it's a long ways off. So I think we're more likely going to set up a low here below 130. So I view this as a courtesy dip. If I'm right, I think it's unlikely that we're going to take out this previous bottom here at 129.20. So courtesy dip scenario here in effect for the Treasury notes, although it's not exactly what I'd call a very exciting kind of play. You know, I don't know how long I've been talking about 2147 and or 2157 in the S&Ps, but it's certainly been a while, and we got to 2147 today. However, maybe we'll make it to 2157 given the impressive strength in the NASDAQ, which went well beyond its 76% retracement. So again, if the market does not come off quickly and earnestly tomorrow, then I think the next likely test will be 2157 in the S&Ps. But again, I am viewing this as a courtesy rally of intermediate proportions. I'm not saying it's done yet, but if it is, this is going to set up quite an impressive decline. And that's why I say we'll watch the real-time update tomorrow, because there is going to be a reckoning, I believe, very soon, and it could be tomorrow in the stock index futures. The E-mini NASDAQ has more than met my upside objective here. I was only looking for 48.75, but we'll have to watch if the market starts to turn off. It was kind of interesting that when I put out the video last night, the market had literally just broken out of this triangle formation that I had previously identified. Now it looks like we just need to count 5 clear waves up here from this low, and we can anticipate some kind of a turn back down. 49.50 is going to be a tough number to fall below here. I'm sorry, 48.50. So we'll see just what this market's made of. If it should happen to fall back below that 48.50 level anytime in the near future, that would be quite a danger symbol. So let's watch out for that event. So that's it for me today. Ron Feinstein, New Wave Forecasting, October 24th, 2016. Back tomorrow.